Commission-free apps are becoming very popular, especially with younger investors. But what does commission-free actually mean? And are there any unnecessary risks being taken with your investments? Welcome back everyone, my name's Paul. If you've never seen me before, I recently started investing and I'm trying to figure out if I've picked the right trading platform for my investments. Anyone who's seen this channel before knows that I'm trying to keep track of Trading 212 and how they're operating. I try my best to assess them as a platform so I can keep my trust in them. I figured that if I'm trusting them with all my money, I need to keep track of them in the same way that I do with all my investments. I do struggle with this a bit though, because they're a privately traded company and there isn't a lot of information out there about them. It's very hard to know if there's anything shady going on with a company. So with investing, there's always an element of trust. Wirecard and Into are two great examples of this. Right now, these two companies are making big news and having mental activity. Investors are still buying shares in them even though they're on the brink of insolvency. But there is one massive difference between these two companies, and this was our ability to see this coming. For example, if you lost money in Into, you probably deserve it. Into has a large amount of debt and it's unable to cover it. Even I was able to predict this in a previous video. If this economic shutdown hadn't happened, Into would still have gone bankrupt. It would have just taken 1 or 2 more years. Don't get me wrong, the Into story isn't actually over. Some companies do recover from this, and sometimes they even thrive. But Intu's best bet right now is just to lay back and let it get picked apart by vultures. On the other hand, Wirecard looked like a really good company. It was really thriving, and it was a real surprise that they turned up without 2 billion. This is fraud, and it doesn't matter how they used it or what they used it for. The Filipino banks could have even stolen it. But the fact is that they told you they had the money when they didn't. And as a publicly traded company, they're obliged to tell you exactly how much money they're playing with. So if you did own Wirecard, or you still do, I do feel bad for you, because you were investing in a company that supposedly had a good future ahead of it. You couldn't have seen this happening with Wirecard, and in one day, you would have lost the majority of your investment. And that's a real shame. This is a big part of the risk equation for investing. Much of this is out of your control, so the best thing you can do is try and find safer companies that you know will stick around for the long term. I feel like this includes my investment platform, so I try my best to keep up with all of the announcements from Trading 212. A few months ago, I speculated on how Trading 212 makes money. I determined that the majority of their money comes from CFD, making a lot of money off poor buggers losing bets. After all that, I could only really figure out that the ISA and invest accounts aren't making any money at all, and something would have to change in the future. Lots of you have speculated that Trading 212 would bring in fees. This would be pretty suicidal if I'm honest, but it is very possible that they could bring in a freemium model. But that's only likely to cover a few of the costs. And many of us have been waiting for Trading 212 to make their next announcement. I get pretty much all of my news from the Trading 212 community forum, because there aren't any other news outlets covering Trading 212. Trading 212 made 2 significant announcements last month. Some of it is great news, some of it has proven a bit more controversial. Some of the good news as a customer is that Trading 212 is now the fastest growing platform in the UK. It seems a lot of us have had the same idea and we want to make a lot of money during the market crash. Hargreaves Lansdown announced that it has about 90,000 new users, whereas Trading 212 says it's got more like 300-400k. That's great news to hear that the platform is growing. It's great to know that others are also entrusting Trading 212 with their investments. It gives me a lot more sense of security. Trading 212 also posted an interesting piece of propaganda. It shows the app activity usage of Trading 212 and others over the past few months. The details come from an app tracker called App Annie. It shows a significant rise in user activity from Trading 212. It's an interesting piece of information, but there are a lot of variables and it might not be that accurate. There is no doubt that this shows the popularity of Trading 212. But don't be under the impression that it's competing with the likes of Hargreaves Lansdown. For a start, the difference in money that's flowing through Hargreaves Lansdown isn't even worth comparing to Trading 212. The difference is just so big. And also, it's worth noting that Hargreaves Lansdown users aren't likely to be using their app. Hargreaves Lansdown attracts a different type of investor. Most of their new users are likely to use the desktop app or even the telephone. So the information from App Annie might not necessarily reflect the true situation. You've also got to note that this graph does not look good for Freetrade, who are considered to be one of Trading 212's closest competitors. You have to question the accuracy of these results because surely Freetrade is doing better than that. Freetrade responded to the graph by saying that it was inaccurate, as expected, but it also added that it's against the rules to talk about anything negative to Freetrade, the kind of maturity that you want from a company holding all your money. If this graph is accurate, it should be sounding severe alarm bells for a Freetrade user. However, I would certainly question the accuracy of these results because it just doesn't make sense for Freetrade to be that far behind Trading 212. Unless Freetrade is really on the brink of problems and it's not telling us about it. Trading 212 announced last month that they would begin a process called Securities lending. And in the last couple of weeks, the changes have been made in the terms and conditions. Trading 212 states that this will make their invest account even more sustainable. I think that means that they'll start to make a bit of money off it. This has been kind of controversial on the forum, and it's raised some questions about the safety of our investments. Securities lending is very commonplace in the industry. If you're a very wealthy investor or a broker who holds a lot of securities for your customers, you can lend out those shares to other brokers or banks or hedge funds. In this case, Trading 212 has signed a deal with a broker called Interactive Brokers. Interactive Brokers already works very closely with Trading 212 by providing their share dealing service. Interactive Brokers are likely to use your lent out shares for the same thing everyone else does, short selling. So Trading 212 will lend out our shares to Interactive Brokers. Interactive Brokers will then immediately sell that share to someone else, with the hope that your share price will go down. When the share price has gone down low enough, Interactive Brokers will then buy it back off the person it gave it to, at the cheaper price. Interactive Brokers will then safely deliver your share back to Trading 212. At first, I understand it can feel very worrying that Trading 212 can just give your share away. It does feel like it puts your assets at risk. But for this part of the video at least, I'm happy to reassure you that it's not actually that risky. You see, Interactive Brokers are required by law to pay Trading 212 at least 102 or 105% of the overall market price of your share as collateral. This means that they're covering yours and Trading 212's risk and giving Trading 212 a little 2% extra for the thank you. This means that at least the amount that you've paid for your share is safe. Also, I guess a good way to reassure you is that it's completely normal within the industry. All of the top brokers out there do this to earn a little bit more cash. If you have one of Vanguard's main investment trusts, then it's likely that some of the shares that have been bought on your behalf are sitting there with Steve Eisman right now. But even though this is very common, there are a few specific questions for Trading 212. Like, will I still receive my dividends? The answer is yes. When your shares are lent out, all the rights to those shares, including the dividends, go to the borrower. However, I'm pretty sure that there'll be something in the deal that says that all the dividends need to be paid back to Trading 212, and therefore be paid back to you. And Trading 212 have cleared it up that you will be paid your dividends. Also, people are worried that their voting rights will change. No, they won't. You never had voting rights anyway. Trading 212 have been struggling to figure out how to bring voting rights to its users. This has pretty much solved the problem for them. Essentially, nothing changes for you. So really, I don't see a problem with Trading 212 taking on securities lending to make more money. I think it's a great way for Trading 212 to make their invest account much more sustainable. If there is bad news, it's to do with Trading 212's increased dependency on Interactive Brokers. While Interactive Brokers is going to be used for securities lending, it's also the only provider for Trading 212 in their share dealing service. When you click buy and sell, Trading 212 sends that order to Interactive Brokers and they find the best possible price for your deal. This might explain why I keep seeing YouTube comments saying that Trading 212 spreads are actually not that tight. If you compare this to Robinhood's SEC 606 report, Robinhood uses 5 different companies to make its deals. I'm assuming that using multiple companies allows Robinhood to go out and tender for deals and get the best possible price. If Trading 212 is only using interactive brokers, then it's only getting what they're given. Spreads isn't too much of a problem to me. I'm a long-term investor, so I shouldn't really care. I'm just thinking that if there is a concern with securities lending, it should be that Trading 212 is becoming a little too reliant on interactive brokers. It's not very diverse, and as investors, we love a bit of diversification. I feel that if Trading 212 wanted to move in a different direction or make some changes, it might have to ask permission first. Because if interactive brokers decides it doesn't want to play fair, Trading 212 doesn't have much negotiating power and all its business relies on them. Like I said, that's just a negative if you're looking for one. In reality, business is business, and if everything's going good, no one's going to touch it. Overall, it looks like Trading 212 are moving upwards pretty fast, and that's only good for my investments. Thank you very much for watching, guys. If you're interested in investing, I use Trading 212 and I have a link in the description below. If you click that link, you can sign up and you get a free share. One of my subscribers also gets a free share. Also, please join us on the free Discord group where we have lots of interesting chats about stocks and Trading 212. And as ever, if you enjoyed this video, please feel free to like, subscribe and invest.